Hello, in this video I want to talk about risk management, something that most traders, retail traders are are forgetting, I think almost. Everybody's talking about technical analysis and all those signal services, talking about being right or being wrong. At the end of the day, it doesn't really matter if you spot an opportunity in the market and you go with it. Make sure you calculate risk at the beginning of the your trade. For example, this is the British pound Swiss franc. It's just a chart from a couple of weeks ago. Let's assume you are doing some analysis on this, and this was a trend line. Well, probably this was the first pullback into this zone, which could give you an entry. So you start looking price at this level here, and once it started moving, you found an entry on a lower time frame. Let's assume it was something like that. So we had a nice rally. Of course, you don't enter over here, so you wait for a certain pullback, and when that occurs, you enter the trade. So this would be just in short, this would have been a nice entry, and this would have been the setup you were looking for. So in this case, you had a risk reward of 1 to 2 or almost 3. So let's assume this is something you would be interested in taking the trade. Then this is a valid setup from a technical perspective. But yet again, if this would have turned around and moved down, your stop loss would have been hit and you had a certain loss. Well, this is where position sizing comes in. Let me show you something when it comes to position sizing. So here is, let's assume you have a capital of 1,000 and you say, well, I only want to have a 2% loss, so that's the maximum, which would mean that in a certain trade, if you are wrong, you lose $20 on that $1,000. No problem. If you lose again, if you lose again, after 5 trades, you're down 100. It's not really something you can get back from, but let's assume that your loss cannot be bigger than this. Your risk reward could be 1 to 2. I prefer to trade 1 to 3, 1 to 4, 1 to 5. Of course, the bigger the better. But let's assume you pick a 1 to 2 from a swing trading perspective, and then you have the 4% minimum of potential in your trade. Of course, you never know if it will go that way. Sometimes you go out break even. Sometimes you have the 6%, 10%. You never know. But let's just pick some risk reward, 1 to 2, and let's say what happens. Well, let's say that in like 21 trades, you have some losers and you have some winners, and overall your account grows, so that 2%, 4% rule will grow. So a 20% loss at the beginning will be a almost $30 loss when your capital grows. But also the $40 profit will become a $60 profit almost once you are over here, doesn't matter. So I hope you get the point that your losses can get bigger once your account can get bigger, as well as your profits can get bigger as long as your account grows. What I did over here is I said every time I place a trade, I win some, I lose some. So as you can see, the formula here is that this 20 minus this is your loss, and then this 40 is your profit. So let's say you have a loser and a winner, so you're up 20, and continue that cycle. So you winning and losing is something in trading you cannot change that. You lose some, you win some. Again and again I say it, if you see on Instagram or YouTube that people are making profits with sometimes you see 90% of my trades are winners. It's complete BS. Sorry guys, it's not the way trading works. You have winners, you have losers, and you gotta even them out, and eventually after almost a little bit more than 20 trades, you are up 50% in this example. So sometimes it's break even, sometimes it's 6% or whatever, but this should be the golden rule. Never lose more than 2% on a single trade. And that way it doesn't need to hurt when you lose, because you know that in the long run this is your plan, and to be growing your account, you know, you have some winners and you have some losers. This is part of trading. So in this case, you are growing. So let me get back to this to the chart. In this case, you identified a setup. You look at your Excel file, and you know that, okay, well, the pullback seems to be over. Probably you zoomed into the hourly chart, for example. Let me get back to the point where I was pointing out this actual trade. Where was it? Well, let's switch back, because this is not gonna gonna help us. So yeah, here we are. So this was the I can point it out like this. Let's say you are waiting for the pullback to be over. Once it got broken, you enter the trade. You set your stop just below the previous low, and you are sitting back and letting this one ride. So the thing how you determine your position size is like, let's assume you have $1,000 trading account. It's not really a serious amount to be trading with, but you know, if it's 10,000, then it's the same equation. You have still that 2% and that 4%, for example. So in this case, your potential of this trade is bigger than the loss. It's over 1 to 2, so that's a good thing. You can enter the trade. If you get stopped out, your position size should be that big that if your stop loss gets hit, from that 1,000, just $20 is your stop loss. So that is how you manage your position size. You cannot go in with the same position size every time. It depends on where the stop is, what your trading setup is, and what the percentage is you are willing to lose. So in this case, you would have made you could have lost 20. You would have made 40. I think looking at this, it would be even more than 40. It would be almost three times as much. You would have had $60 on this trade, with the potential of losing 20. So that's it. And if you are a safe trader and you see that this resistance, oh no, you don't know that. No. If you want to smooth your stop, I'm more of a, you know, the setup is there. Get in and accept your loss or potential win. I'm not really the kind of guy that really moves his stop very early, because a lot of times you get those nasty pullbacks or those news spikes, and then you get stopped out on break even. And then it turns back into the direction you were already going. Trends that don't turn around just like that. So yeah, so let's go over to the risk management. So like I said, your capital of 1,000, which is kind of crazy to be trading with, but you never know who starts with what kind of money. But let's assume that's a serious account with a minimum of 10,000. The same thing goes. It's just if you lose, it's 200. If you win, it's 4. You win, you lose, and then at the end of the day, after a couple of trades, from 10,000 to almost 15 is quite amazing. It's the bigger part of the whole. So since you were looking for a risk management PDF or file or anything, in my book I have dedicated the third part of the book completely to risk management, where I explain this in extreme detail. Check out the link below. Just sign up, verify your account, make your first deposit. It's my preferred broker. Send me a message through email or Instagram. I don't care, and I'll be happy to send you the book for free. It's 100% free. After reading the book, send me your trading plan, send me your strategy, send me anything you need my feedback on. I'm happy to ask all your questions, also things you haven't found in the book or about the book. Happy to ask those questions. And after that, if your trading journey continues, let's stay in contact. Ask me things you need to know, happy to help. But I think the most valuable part of my book is the whole risk management part. Everybody who read my book comes back to me and like 95% tells me part 3 was the missing part in my trading. The technical analysis is easy, I've learned it in a couple of weeks, but the risk management, how could I have not seen this? So happy to help everyone who's struggling with that. See you in the next video.